Bloomberg Audio Studios. Podcasts, radio, news.
Well, Elon Musk is now the richest person on the planet.
More than half the satellites in space are owned and controlled by one man.
Well, he's a legitimate super genius. I mean, legitimate.
He says he's always voted for Democrats, but this year it will be different. He'll vote Republican.
There is a reason the U.S. government is so reliant on him.
Elon Musk is a scam artist, and he's done nothing.
Anything he does is fascinating to people.
Welcome to Elon Inc., Bloomberg's weekly podcast about Elon Musk. It's Tuesday, January 28th. I'm your host, David Papadopoulos. It's Tesla earnings week, people, which means, of course, earnings bingo. You know that. Get out your popcorn. But it'll also give us a fresh window into the financials of a company that is absolutely taken off in the stock market since Trump's election. So the question is, are the fundamentals catching up to these growing expectations of what Tesla can be in the Trump era, or are they falling further behind? We'll dive into those numbers with our regulars here, Max Chafkin and Dana Hull. Hello to you both.
Happy almost earnings day, David.
And happy earnings day to you, Max. Dana, hello.
Hello, hello.
And we have our global auto czar beaming in from London, Craig Trudell. Craig, hello, sir.
Thanks for having me.
Then we're going to talk about Musk and his Wall Street bankers who suddenly and finally see an opportunity to unload the $13 billion of loans they doled out to finance his purchase of Twitter. After 2 years, the stars seem aligned to make a sale happen unless, that is, the out-of-the-blue emergence of DeepSeek scuttles the whole thing. We'll talk about all that with one of our top Wall Street reporters, Sridhar Natarajan. Okay, Dana, I start with you, though. Tomorrow is Tesla earnings day. Remind us what we know so far in terms of how the fourth quarter went for Tesla and what you're going to be looking for the most in the numbers that come out and in the conference call that follows the release.
So Tesla earnings, we know how many cars the company delivered in the fourth quarter. We know that for the year, sales were down roughly 1%. And so the big thing for earnings is the growth outlook. And, Elon Musk is going to do whatever he can to kind of take control of the narrative and promise Wall Street that everything is great, that they are making progress with FSD, that the Model Y refresh is happening. And this is going to be the first call since Donald Trump was elected. And so I expect there's going to be a lot of questions about DOGE, about tariffs, about, is Tesla ever going to build a Mexico plant or not? And so it's really more about the call than the numbers itself.
Right. By the way, just for the record, my bet on the Mexico plant is we never see that, at least not over the next 4 years. Craig, Dana mentions the Model Y refresh, which reminds me, I don't know that we've talked about it on this show. Tell us a bit about it and how high expectations are for it in terms of driving sales of Tesla's top model.
So I guess the first thing to start with is the look of it on the exterior. It's got a sort of Cybertruck-like face. It's got a light bar running across the front, very similar to the Cybertruck. Otherwise, there's honestly not that much to say about it. I mean, there's in the rear seat, you now have a screen, along with the screen that, folks are used to up in the front row. There's some interior changes in terms of, number of speakers. They kept a turn signal stock, which they took out of the Model 3 when they refreshed that. And Tesla owners didn't particularly care for that. That's the sort of level of lack of newness there.
I gotcha. So it's pretty minor stuff. So you don't seem to expect necessarily that refresh is going to make an enormous difference. But tell us what you're most looking for tomorrow in these numbers and in the call that follows.
Yeah, I think I agree with Dana that the outlook is going to be what's most important, but I also think that it will be interesting to see, just how much of a hit they potentially took in the fourth quarter. They did deliver more EVs than in any quarter than they ever have, but they really pulled out all the stops to get there. So, they did, big discounts. They had, cut rate loan and lease offers. They had, free charging deals. And so, how much did they sort of need to give away in terms of, profitability to get a result that honestly was a bit disappointing even for Tesla? I think they, guided to this idea that they would be able to grow for the year. And as Dana mentioned, they actually ended up, even despite all of those, promotions and efforts, actually having a down year for the first time in more than a decade.
Craig, not to belabor the point, but just give our listeners a sense. So when margins were at their highest and just spectacular for Tesla, a standout in the auto industry, what exactly were they and where are they now? What do folks expect for the fourth quarter?
Yeah, I mean, during the pandemic, I think we saw, across the industry, this huge run up in margins. And so, we saw for everybody, a big, bump in terms of, they had plenty of demand, but not enough supply. And so for Tesla, we were seeing, more than 20% margins on a quarterly basis, for some time. And that was as good as it gets, aside from, a brand like a Ferrari, right? And so we've seen now that come back down into the double digits still, but in terms of having profit margins more in line with what you would expect to see from other car makers. In the past, that margin used to be much better than their Detroit competitors.
Max, this company is, and I'm not saying this just because we're doing this podcast, but it really is one of the most fascinating stocks out there right now and fascinating companies right now, because the stock is still, even after a recent sell-off, up like crazy. It's up more than 50% since Trump was elected. But the sales numbers, as these guys are saying, are just meh. Margins are shrinking. And there's this growing sense out there that the more Elon gets involved in politics, the more he's alienating a big chunk of his potential customers. So, unless this dream and this vision of the robo-taxi and the AI future comes to pass, I don't know. The math gets tricky.
So like with Tesla, and I think this is true about basically all of Musk's companies, you have kind of like the business and the story. And at times they've been kind of pointing in the same direction, and at times they've kind of diverged over the course of the company's life. And, since we've been doing this podcast for like 2 years almost, the business of Tesla has been kind of the same. You have an aging product line that people are not that excited about. Craig mentioned the refresh of the Model 3, which I don't know if we've actually ever mentioned that on this podcast. Maybe we have, and I've just forgotten it. But like they went and refreshed the Model 3, and it doesn't seem to have made a huge difference. Or if it did make a difference, it was, helping from a place of weakness. The growth story that you're hitting on, the AI, robo-taxi, somehow Trump's going to do something amazing. He's going to bring the good vibes back or whatever. Yeah. He has a lot of ways to go on the earnings call to do that. And I think he will try, right? He's going to try to talk about robotaxis and the potential for the regulatory environment to change. The problem is, of course, you need a actual working robotaxi to be able to take advantage of a favorable regulatory environment, which is not clear they have. And then the other problem is there are sort of headwinds or whatever you want to call it, sort of blowing in the face of this story. One of them is that we've seen a sudden kind of correction in AI. So like we have investors reacting to the release of this Chinese large language model DeepSeek and suddenly devaluing a bunch of AI stocks. That potentially hurts, the AI story that Elon Musk is going to try to tell. And the other thing is these regulatory credits, which has been a big source of Tesla's profit, as well as the tax subsidies. Trump, in an executive order, has basically said he's going to get rid of these, or at least begin considering getting rid of these, which arguably would hurt other EV companies more than it would hurt Tesla, but it will also hurt Tesla.
Craig, I noticed that. Tesla, when the DeepSeek news came out yesterday and much of the tech complex absolutely collapsed. NVIDIA, fell, 15% or something like that. Tesla didn't move that much, but it does strike me that if DeepSeek was something of China's Sputnik moment in terms of AI, there could be a potential warning sign there for Tesla and its plans going forward.
Yeah, I think that's right. And I do think that Tesla did sort of take it on the chin. It was certainly no NVIDIA in terms of how much of a hit they took yesterday. But they too, did have a rough day in the market, along with a lot of other companies. I do think that, to Max's point, we've also just generally seen challenges that companies that have gotten much further in actually commercializing robo-taxis. We've seen a major player in that field already fall by the wayside, right? In GM's, Cruise. And today they're out with their earnings and sort of beating their chests about the fact that they're going to lose a whole heck of a lot less money on that business that they've decided to just fold into the car company. They're happy about that. So I think we've also seen, companies that didn't get so far as Cruise fold. I'm thinking Argo AI, which Volkswagen and Ford acquired. We've seen some people start to commercialize the robotaxi business, but nobody's making any money. So it remains to be seen how anybody's going to actually earn anything here.
Yeah, I think one of the big questions that investors are hopefully going to ask is, the Trump administration has alluded to this idea that they're going to have a federal framework for AVs. So rather than this patchwork of state regulations, there could be sort of a federal framework that would make it easier for Elon to get his robotaxi approved. So if anyone asks Elon about that, I mean, he could say, oh, yeah, like I was just talking to Emil Michael and blah, blah, blah. I mean, he is part of the government now. And there's a reason why he donated so many millions of dollars to Trump. There are things on his ask list. And so AV regulation or lack thereof is one of them. And so I think that's going to be a big part of the call tomorrow as well.
One thing, aren't they supposed to have an affordable car like now? Craig, weren't we promised a $25,000 car?
Really?
Like, shouldn't this whole podcast just be like, when's the $25,000 car coming?
My best guess to that is it's never coming. And the only way I could see, some potential for them actually making good on that is actually sticking a steering wheel in that Cybercab that they showed a few months back and selling it as a human-driven car for some time. Maybe they could make that sort of, smaller size car at least, closer to that price point. But I think from what we've sort of gathered over the last year, it looks like that's been abandoned for self-driving purposes.
Craig, I wanted to go back, though, for a second to the topic of how Musk's politics are alienating potentially a chunk of his customers. We have seen signs of late of resistance of sorts or to the company and people lashing out at the company and its products. And you guys also had an interview with a Tesla rival where he spoke to this topic. Tell us a little bit about that.
Yeah, we met with the CEO of Polestar, which, of course, any company that is trying to compete with Tesla is, of course, incentivized to talk about, ways in which they could potentially benefit from any setbacks at their rival. But I did find this conversation with Michael Loschler, the relatively new CEO of Polestar, really interesting because he's German. And as we know, Elon has been inserting himself in German politics to this really significant degree and throwing his weight behind the AfD, which is, a far-right party in Germany with a lot of skeletons in its closet. And he said in no uncertain terms that, the way that Musk has inserted himself into the sort of political conversation in Germany is unacceptable and is not going to fly. And, I think that we've seen some indications that, he's right to say that. We've seen protesters project the motion that Musk made at last week's Trump event that, people saw as a sort of Roman salute, that projected onto Tesla's factory outside Berlin with the words Heil Tesla. We've seen in Poland, which, this week is commemorating 80 years since Auschwitz, a minister call for a boycott against the company. We've seen, vandalized Cybertrucks in the Bay Area. And just this morning, I saw something about, a store in Seattle that was tagged with, references to Hitler. And so...
Yeah, no, that vandalized store in Seattle really jumped out. I mean, it was the language that was sprayed on the window was aggressive. Nazi scum, f*** off.
Well, and
that's what it said.
We can get to this. Maybe we talk about X, but we're seeing a lot. The backlash has been much, much more pronounced since the quote unquote awkward gesture. We've seen Reddit, lots of boards on Reddit banning X links, and you're just seeing it's more than just a bumper sticker or two. You're seeing more people pushing against it. On the other hand, of course, America's a polarized country. A lot of Tesla sales are still here.
But it's not just America; it's the world. As Craig is pointing out.
It definitely seems like this is going to be bad for business in Europe. It does seem like Tesla sales have suffered from Elon Musk's political turn. I don't think we know yet just how much.
Yeah, I mean, and Dana, I know I've already got you in my ear saying, oh, that's anecdotal evidence, show it to me in the macro numbers. Given that there are some people who feel so strongly about it that they're willing to go out and vandalize private property in multiple countries, is that not a window into a broader sentiment among a much larger percentage of potential Tesla customers who you are driving away?
Listen, there's no question that Elon's politics are hurting sales. I think that's irrefutable. But there's no hard data that ties the two together, because people don't buy Teslas for any number of reasons. And the person who went out and spray painted Nazi scum on a store, do they own a Tesla? Were they about to buy a Tesla and then they weren't? A lot of this is performative outrage. And I mean, I get it. The outrage is real, but it's the same thing of everyone's saying they're going to move to Canada if Trump is reelected. These are not people who necessarily owned a car or were in the market for a car. And I see the same thing. There's lots of people that are oh my God, I now I'm embarrassed to drive my Tesla. And it's well, you're still driving it. And the biggest thing is the stock. If you're so upset about Elon and his behavior, then sell the stock. Biggest example is California's pension fund is a huge shareholder of Tesla. They have sold off their position a bit, but they are still a top holder. So I'm not a big fan of this performative outrage. If people were really upset, the stock valuation would not be as high as it is. And the fact that the stock has remained so high, despite all of his shenanigans over the past 6 months, is really telling. So I think you will continue to see Tesla lose market share in states like California. You will continue to see brand erosion and surveys about the value of the brand erode. But Elon is a financial engineer, and as long as that stock price stays high, he is going to be fine. And no analyst on Wall Street is calling out this.
No, Dana, that's a good point. But I will note that in speaking with Esha Day, our Tesla stock reporter this morning, she did say to me that she, in her conversations with analysts, that they are bringing it up more with her than they ever have before in the past. Perhaps not to the point, indeed, of penning it into notes, but it's something that comes up.
Yeah, because they're afraid. So if you really care, then put it in a note, put it in
All
writing.
Right, Wall Street, put it in a note. Otherwise, we don't want to hear about it. Max, tell us about bingo.
I mean, it's the best time of the year. We've huge news here in Elon Inc. land.
Tell us.
Bloomberg Terminal subscribers, I'm sure that most of our listeners already subscribe to the Bloomberg Terminal, can now play bingo on their terminal. And it's interactive. There's a leaderboard. The card will change. Dana and I are very excited about this.
There's a leaderboard. Wait a minute. So everyone's not getting the same card anymore. You get different cards.
It shuffles.
We have iterated. We have iterated our product, and it is
Courtesy
now ready for
AI?
a soft launch.
This is all human labor, as far as I know. But we are very excited about it.
Brought to you by DeepSeek.
I do think that this is a real, just from a pure bingo perspective, leaving out politics or money.
Sales.
Just the question of how Trumpy does this earnings call get, to me, is it will be interesting. We've got a few Trumpy categories on the bingo card. I'd say some reaches. First Buddy, Greenland are both potential squares.
All right, so you like First Buddy as a bingo square. You also like Greenland, fun. Dana, what are your favorite squares out there?
Oh, DeepSeek. Come on. This is going to be all about, I'm waiting for the big
DeepSeek is a freebie.
China questions, DeepSeek, Cybercab, tariffs. Let's go I want full-on geopolitical Elon.
You all can still download the card, and this is for those who are not Bloomberg Terminal subscribers, that small universe out there. You can download it at bloomberg.com/Elon Inc. and play with everyone here.
The terminal handle, BNGO Go, by the way.
No I. BNGO.
Isn't that what I said?
I'm just for emphasis.
All right.
Craig Trudell, Dana, we say goodbye to you, but enjoy the bingo, enjoy the earnings, and we'll talk next week.
Thank you.
Thanks so much.
Okay, Max and I are now joined by Sridhar Natarajan, one of our crack Wall Street reporters here. Shri, hello. Welcome to the show.
Hello.
Now, listen, Max, Shri's got this story that he likes to periodically throw out there that I just want to just debunk from the get-go. He alleges that at some point in early on in his career, I tried to fire him. That's not true, because had I tried to fire him, he wouldn't be here today. But Shri is an unmitigated superstar, and that's why we have him on the show.
I'm going to choose to believe the story because it's funny.
It's kind of
and true.
It is not. It's bullshit. All right. So, Shri, we're going to talk about Musk and his bankers and his acquisition of Twitter. For our listeners out there who have forgotten a bit about this, which may be a number of them, they certainly haven't forgotten about Twitter or X, but they have forgotten perhaps about the way the deal went down. Let's go back to the beginning and remind them about how this deal was financed.
So we're in 2025. You want to go back to 2022? I'll take you further back. I'll take you back to 2010. That's the first time Elon Musk ever tweeted on Twitter. 2022, Elon picks up this crusade of Twitter is not doing enough for free speech. And what starts off, or at least looks like and sounds like a joke idea of him wanting to buy Twitter, wanting to poll his users and wanting to see if he could take over the platform, actually becomes something serious. Management is rattled by it. They even offer him a board seat. But soon things escalate and he just straight up says, I want to buy Twitter, comes in with a pretty premium on what was then a public company. So forces Twitter management and the board to consider his offer pretty seriously. All in, that was about $44 billion. And after a little bit of push and pull, I think at the end of the day, Twitter, advised by Goldman Sachs, JP Morgan, two of the premier investment banks, who have to do their duty and do tell the management that this is a pretty good deal. Like the man or not, you can't say no to this because your shareholders will be upset. And they approved the deal. That sounds simple enough. Now we should move on to the chapter where Elon owns Twitter. But with everything, Elon, things are not quite that simple. 2 months later, he tries to find a creative way to get out of the deal. However, the courts force him to go ahead with that deal. And so he does front up the money.
That $44 billion, which comes from both a group of equity investors who put up money to buy a stake beside him and also these Wall Street banks.
Correct. Cash from Elon, margin loans extended next to Tesla stock collateral, a group of equity investors that includes people like everyone from Larry Ellison to Prince Al-Walid. So you have an eclectic mix there backing this deal. Mark Andreessen, Sequoia. So all of these players who put in some of the equity.
Diddy, I believe, right?
That I'm not sure about.
I think that's right.
Diddy was in there. It was eclectic.
Wasn't CZ a part of the mix as well?
CZ,
Yes, right. So I was right. Eclectic mix of investors. So you have a situation where when you still need about $13 billion of debt.
13, right? So they've come up with, so it's a $44 billion purchase. They've come up with 30 some odd in cash money. They need financing of about $13 billion.
And $13 billion on a company like Twitter, which if you go back to 2021, look at the financials, full year 2021, I think they were projecting EBITDA of something like $1 billion and change.
You got to help us out here. EBITDA.
Fancy earnings metric, but it's a metric that debt investors live by. It's a measurement of profit, not necessarily pure profit, but it is a key metric for Wall Street investors. And by that metric, keeping on $13 billion of debt on that company is a risky maneuver. And if you go back to the environment at that time and the years leading up to that deal, and you know this very well because we worked on so many stories about this over the years, that it's the kind of risk that banks were not in a position to take, or at least didn't want to take because regulators were not happy with it. They didn't want to have to run around with that kind of risk. Except the X factor here, the literal X factor here is you're dealing with someone like Elon Musk. Help him out on one deal, and it could pay off brilliantly on so many other transactions and financings he brings to the market.
You help him come up with this money, even if you're not crazy about doing the deal. You help him come up with the money, the $13 billion, which you lend to him, and then he's going to cut you in on other deals in the future, maybe an IPO of SpaceX, so on and so forth. So the group of the banks are names like Morgan Stanley, Bank of America, Barclays, among others. Their normal MO, Shri, is they make a loan like this. It's a risky loan. It's called a leveraged loan. And they want to get out of it. They want to sell these godforsaken loans, or at least the vast bulk of them, to clients of theirs. They don't want to get stuck with it on their books. the financiers, who are, just for a second, who are typically those kind of buyers who would buy those loans from banks?
Think of large institutional investors. Think of people who are big in credit markets. You can go from a Blackstone to Apollo to PIMCO to hedge funds. A lot of these institutions who themselves have come up with the money because pension funds and retirement funds and sovereign wealth funds have invested in them.
Yeah.
They have this treasure trove. They can use the cash from that to buy into these deals and the deals that the banks bring into the market. So these are the kinds of people that they will approach. And should have been a sell. They recognized from the outset it was going to be a hard sell.
Twitter back in 2022.
Back in 2022, because everything constant, if Twitter's earnings was going on the same path that it was at, this was a difficult deal. But if you remember the noise at the time and all the changes that Elon made, all the massive staff cuts, there was chaos. And what that chaos meant was advertisers were the first ones to flee. That was the lifeblood of revenue of Twitter. That's how they made a lot of their money. And when that happened, the earnings profile, the forward earnings profile suddenly looked very shaky. And revenue did slump. Earnings did slump. And that suddenly became a very, very difficult ask when you go to investors and say, can you please take this debt off us?
Not only that, but you had Elon Musk in the months before the deal was closed, trying to get out of it and going around telling everyone that $44 billion was way too much money. Yeah. This thing was actually,
I didn't mean it.
Yeah, like basically doing the worst sales job ever when you're trying to unload some corporate debt.
Right.
And so, yeah, I mean, it's like as soon as the deal closed, even if he hadn't told the advertisers to go F themselves, as he did eventually, I think it would have been a difficult...
You just don't want a client like that actually going out there and making life so difficult for you. They wouldn't say that because they also know he's the man behind SpaceX and Tesla and Neuralink and whatnot.
You get to be the client from hell, though, if you are a whale, right?
Absolutely.
It's like the guy in the casino kind of abusing all of the, the dealers and the person bringing the drinks or whatever, and is still being treated super well because everybody there knows that he is worth a lot of money.
If you're a cash cow, they'll put up with a lot of your BS. If you're not, they won't. And even the other thing, Sri, that went against these bankers after this deal was cut to finance the purchase is the interest rate environment changed quite a bit. You went from a world in which interest rates across the globe, in the U.S. and other places, benchmark rates were close to zero. They surge up to over 5%. So all that goes against them. They've been sitting on these things forever, nursing losses. I think some of them have written off losses on it. But again, all of a sudden, they're in action, they're in play, they're trying to sell these things. What has given them this wind at their back?
Well, the noise has died down around Twitter. The platforms...
We like to now refer to it as X.
And now we have to call it X. So that not only has the noise died down around Twitter, Twitter itself has died down and we talk only about X. It does seem to have maintained a core group of users. And we have gone through this very, very busy cycle, which otherwise is known as a U.S. election cycle, which has meant that platform has been more active and more busy than usual. That is a good time for a social media platform, and especially good time for a social media platform that's sort of news-focused, right? And also a lot of the advertisers who initially fled Twitter are back on X. They are advertising on that platform again.
Are they?
There are certain...
Max, are they?
Twitter has said that their advertisers
This is what the
back.
bankers are telling Sri.
We don't really know what that means. Does it mean that like the advertisers who were there before are spending at their previous levels? I would guess the answer is no. Does it mean that advertisers who were like completely staying out of X because they were offended by Elon Musk or actually just didn't think Twitter was a good enough business have decided, hey, this guy is at the arm of Trump. Maybe it makes sense to like throw him a couple bucks and avoid getting into a Twitter war with one of the most powerful people, if not the most powerful people on the planet. Like it's more the latter, if you ask me.
But
still, that is an improvement, arguably.
Yeah, no, it is.
And
but
you don't have to
bankers are telling you that advertisers are back.
No, but more importantly, you also have to slice and dice that a bit. You don't have to worry about the absolute math here. I don't need a company that is worth $44 billion to make this debt appealing to investors. I just need to make sure that this company is strong enough that your money good on the $13 billion. So from that perspective, there has been a bit of a rebound. The revenue at this company is certainly not what it was for full year 2021. We're still way off that mark, is my understanding based on our conversations with bankers and investors.
But it's going back up?
It is improved from, say, 12 months ago, from 18 months ago. So that's a helpful sign. Add to that two very distinct factors, not the kind of things you keep in mind when you're thinking about leverage finance, when you're thinking about risky corporate debt. But here it matters. Elon played a key role in cheerleading Trump's return to the White House.
Yeah, I mean, and X is kind of, as Max calls it, the media arm to a certain degree of the Republican Party.
I mean, the risk here, right, if you hold their debt, is that Musk says, F this. I'm done. I'm worth $300 billion. I don't want to run this thing. I've been threatening bankruptcy for a long time. Forget it. We're bankrupt.
That's not happening now.
But there was a world where that could have happened.
A year ago, we were talking about that.
And that world right now is unfreaking thinkable.
Total.
Because for all the things that Shri is saying, for the things you're saying, this thing is, maybe it's on the rebound, maybe it's not, but it's certainly useful to Elon Musk now and will be useful to Elon Musk in the foreseeable future. There's no universe where he's going to walk away from it. And you have the fact that, like, anything that's even like kind of tangentially connected to Trump or Trump vibes has seen like a 50% increase in its valuation or more. And so, like, clearly this thing is on the come up in terms of its value, in terms of its lasting power and so on, even if like the revenue is not there. And I don't think the revenue looks great.
With the business rebounding, what is important is you don't need to sell to investors an equity investor-like dream. You don't need to say that something that's worth $100 today will be 100 bagger in 2 years from now.
Am I going to get paid back my $13 billion?
You just need your principal.
Interest.
That's all that debt investors care about. So from that perspective, things are improving. From that perspective, the Trump linkage, the Trump halo is helpful. And then there's this complete wild factor here of what we now know as XAI Corp. 2 years ago, that is Elon Musk's artificial intelligence startup. Yeah. We have been caught in this cycle of craze in the AI world that has drawn all sorts of investors to it. Now, what has happened is XAI and X have a lot of interconnections. It has trained its models off of the data set on X, use the chips and servers. And instead of paying money, like you would to another company
they like
for using...
barter, intercompany barter.
So the barter almost in this case is X has gotten an equity stake in XAI.
Yeah.
And like all things AI, in a span of 2 years, that stake that X has in XAI has become quite valuable. Reports say that XAI...
Because Grok is that awesome, Max.
Look, last valuation for XAI was roughly $50 billion. Now we reported this week.
Which gives, X's stake
in XAI is about $6 billion.
So if you're a banker trying to get rid of these loans that have been stuck on your book for 2 years, that is something that you are saying to possible buyers of these loans, hey, by the way, you buy this loan from me, you in part get a claim or a lien on X, which gets you a lien on the great XAI.
So David, the optimistic banker, is going around to all the investors and saying not just improving fundamentals in the business, doesn't have to go to the peak levels of where Twitter was, but X has seen its business rebound. But on top of that, what you will have a lien on, that is, if you're a secure investor, if you're someone who has collateral against the money that you're lending to this company, you will have a claim on X's stake in XAI, which is worth $6 billion. So take whatever earnings X has, apply an 8 times, 9 times, 10 times multiple, whatever's the going rate in the market. On top of that, add the value of this stake.
Yeah.
And then see that the loan that you're putting up, what is the loan to value? Is that about 50%, 60%? At that rate, it will draw in a lot of people. Again, we don't know if it's a done deal. We know there's a lot of
Have they sold any
news.
Any of these loans yet?
They've sold a small piece. They went out there and sold about $1 billion of these loans.
Is their plan among these different banks to sell all $13 billion, or are they
I think the goal will be, of course, to get there. I don't think all $13 billion gets off their balance sheet anytime soon. But, you start, one is off, another 3.5 in the coming few weeks. It at least sets the stage for a lot more to be done.
Which, by the way, Max, if that's right, that would be more or less in line with your everything in the Musk complex is up 50%, since the election.
People should listen to this podcast. I feel like, we called this like months ago.
It's not surprising
you should
that the
listen to the podcast.
I am an ardent listener of everything you say, David, podcast or not.
The other thing I'll say is, I don't think the valuation, like $50 billion or whatever for XAI is crazy given OpenAI's valuation, which is something, it was like $150, $200 billion, or somewhere in that range. But we are in the middle of an extremely frothy period here. We're also living through a sudden kind of reevaluation of just how much those things are worth. I mean, if DeepSeek does everything that all the people who are excited about it believe it's going to do, that's going to really hurt OpenAI's business. OpenAI is not going to be worth as much. And frankly, XAI probably won't be worth as much.
The whole complex has got to be devalued quite a bit, which is what we saw in the stock market yesterday. I mean, you could argue, obviously, ultimately really good for the broader economy and really good if you can suddenly access this technology.
That said, like in certain ways, XAI is a little bit like DeepSeek in the sense that this is something that Elon kind of slapped together. Remember, like when this was launching, he had like, it seemed like a handful of engineers.
We should go pull audio clips of our reaction.
In a matter of months, he did manage to build something that like is, I don't know, is it as good as ChatGPT? Probably not. Does it get pretty close to how most people use that chatbot? Yeah, probably it does. And so in that sense, like this is maybe arguably another sort of lower cost chatbot that is also eating away at OpenAI's, potential, market share.
Before we let you go, just to ask you, because you're a star banking reporter for us here, are you ready to bank on X? Are you going to put your, because, right, Max, tell us. I think
Sri just made a face. I almost don't even know how to.
It seemed like the answer was no. It was no.
I'm not even going to deign to respond to that question.
No.
Max, tell us about the news today.
The news is that X has a banking partner, X, the Everything app, which, again, from the jump, basically, with the takeover, Musk has said he wants this to be basically like a WeChat. So there would be banking on there. So there will be all sorts of things. X has some sort of partnership with Visa that is going to allow you to at least maybe send money on X finally after 2 years.
Wow.
Everyone's been clamoring for this. I mean, I actually don't think anyone has, but of course, except for Elon Musk, because he sees this as a potential way to expand the utility of this app.
And all I would say is don't dismiss it offhand, because for a while, the chatter and the talk in the banking sector, in the banking world, the Jamie Dimons of the world have talked about this idea, the specter of tech companies with hundreds of millions of customers and vast amount of resources at their disposal, having the ability to create a competitive moat where they can actually compete against banks. They have the technology, they have the platform, they have the users, and find a banking partner, and suddenly you can have an Apple credit card. You can have a fintech that sits inside Walmart, and you can have X money where you are, zipping money back and forth between users on that social media platform. So it certainly has value and potential. Now, can Elon drive up the hype and the hoopla around it to convince people to actually partake?
Yeah.
And the answer is, knowing Elon and knowing his legion of followers, it's quite possible that happens. And if that takes off, that will be another crucial leg to the X story that will make it more appealing to investors.
You're telling me these loans aren't worth $90.95. You're saying these loans are worth 110 cents on the dollar. That's what you're telling me.
Can I just say, first of all,
buy them now.
I'm saying this just purely as a long-time Twitter user, someone who's been on this thing forever. No one wants to trust this thing with their money.
No one,
I barely trust it with my bad jokes. And that has been true before and after Elon Musk bought it. I mean, there's some universe, right? Elon Musk is a great marketer or whatever. Maybe he somehow convinces people, but you're starting from a very poor base, which is this is not an app that is broadly trusted with anything other than to entertain you.
No, and that is a good point, and we will end on that. The only thing I'll say though, because I don't want Sri to leave here totally dispirited, is his point on not dismissing something that Musk has come up with. I think it's fair. We've learned the hard way not to out of hand dismiss anything he dials up.
That's true, yeah. And I feel like we actually have all along been articulating on this podcast saying that, this X thing, there are ways that it can make the money back. We've been talking about this AI thing for a year.
I'm glad we all end in agreement.
No, I don't know about that. Sri, thanks for joining us.
Thank you.
Max, great as always.
Pleasure to be here.
This episode was produced by Stacey Wong. Anna Masarakis is our editor, and Rehan Harmansi, our senior editor. The idea for this very show also came from Rehan. Blake Maples handles engineering, and Dave Purcell fact-checks. Our supervising producer is Magnus Henriksen. The Elon Inc. theme is written and performed by Taka Yasuzawa and Alex Sugiura. Brendan Francis Newnham is our executive producer, and Sage Bauman is the head of Bloomberg Podcasts. A big thanks to our supporters, Joel Weber and Brad Stone. I'm David Papadopoulos. If you have a minute, rate and review our show. It'll help other listeners find us. See you next week.